Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Monday, March 4th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts, start with the big picture, work our way into the day itself. This is a weekly chart, just shows a long-term buy signal from last May when we closed above these formations at 162.55 to 163.96. We fell back to them off that July high last October-ish. I don't know the exact timing, but I think this was an October low. We rallied to a new all-time high and have fallen away since. The December high was an all-time high. Now, the question I've had, and actually, let me jump to this chart here, because preceding the lower 160s long-term support, we have a mid to longer-term support at 174.36, which I am expecting now. I don't know about that exact number to the very tick. Preceding that is 175.32, which I'll show you in a moment. But it really is the 173.90 to 175.32 region, which is a base of mid to longer term support that I do think is likely this week. Over the next 3 to 5 days, following the settlement last Friday, below the red trend line at 180.61, we have that as our session containment level. And then you have this intermediate channel structure at 180.43, just a minor point today. Holding below 180.61 does maintain a 3 to 5 day sell signal into this 173.90 to 175.32 area. 175.32 is a channel bottom coming down that's formed off that December high against the more recent late January high and the intermediate early January low. 173.90 is a descending longer-term channel top that is the same formation on the daily chart that I showed you earlier, 174.36 on the weekly chart. So the entire area is a solid zone of long-term support. 3 to 5 day downside objective, able to contain selling not only for the week, but not only through March, but even through the second quarter, as we can come off of this area back to what would then be channel resistance in the lower 190s, and even on to new all-time highs as we move ahead over the next few months of testing the 173.90 to 175.32 region. Now, if we were to close today, for instance, below 173.90, and I don't see that happening, but if later in the week we close below 173.90, then yes, I would anticipate within a short period of time, probably within 2 to 3 weeks, I would say, this 162.55 to 163.96 region where the market finds long-term support. Now, it's worth noting, if you're looking at this chart right now, that preceding 163.96 is an equally significant horizontal channel bottom at 166.93. So, how to play all of this if we get the signal with a settlement today below 173.90, which I showed a moment ago. We have a 2 to 3 week sell signal to 166.93. It is 166.93. There is the formation that we have to continue closing above. On an intra-week basis, we can spike below 166.93, tag 162.55, which can contain selling through the rest of the year, but we do need to see that particular week settle at or above 166.93 to fend off what could be a long-term sell signal really through the rest of the year. So it would be a weekly settlement below 166.93, FYI, that would tell me we have a good high for the year, and the market then susceptible to collapsing back, into the 120s, 130s, 140s over the following 2 to 3 months. We'll have that objective mapped out clearly, as usual, if we were to approach this area. But I'm kind of giving you the big picture right now. We are expecting 174.36. This based on the sell signal that occurred last Friday below 180.61. And that 173.90 level is, once again, all of these structures on the daily chart. You've got a channel bottom at 175.32, 4-star support, and a former descending channel top at 173.90, 4-star support. This area able to contain selling, once again, not only for the week, month, but even through the second quarter. Upside today, if we happen to close above 180.61, keep in mind that would also be above Friday's 180.53 high. And the last Friday was the lowest we have been since the December high. So it is a move low thus far. And if we close above 180.61 today, I do think that carries with it an aggressive upward pivot point that should, over the next, 3 to 5 days or less, yield 184.50. 184.50 you can see is a 3-star resistance. It is a descending 1/3 speed line, a new one based in part on last Friday's low. So, you've got 180.61 is a session containment resistance level. It's also a 3 to 5 day pivot point, below which we're expecting 174.36, 175.32, this area down here, and above which 184.50 expected. So if we happen to actually gap higher and open above 180.61, there is the possibility with present volatility that we could test 184.50 on an intraday basis. But I do think the likelier outcome is if we close today above 180.61, within 1 to 3 days you can expect 184.50, where we can top out for the week and fall away into next week. And in fact, it really is right now the mid 170s support to mid 180s resistance, I think, is your two-sided framework for the next few weeks. So, 180.61 is an inside pivot point that represents more of a 3 to 5 day time horizon, above which 184.50 expected within several days, below which the mid 170s over the next 3 to 5 days. But if you're a 2 to 3 week swing trader, you're buying the mid 170s in anticipation of the mid 180s, and you're selling the mid 180s in anticipation perhaps of falling back into the mid 170s. Now, if we were over the next week or two to settle above that 184.50 speed line, I see that as a good March low. We should then within 2 to 3 weeks reach 192.05, and within 3 to 5 weeks I think we can make our way all the way back to 194.40 to 195.73. So 184.50 is only a 3-star weekly resistance area, but does contain multi-week pivot point qualities. In other words, once we test it, we can fall back within several weeks into the mid 170s, and once we close above it, we have a 2 to 3 week buy signal to at least 192.05. I'm keeping this as a session containment level only because I do think if we close back above 184.50, this market can, over the following 2 to 3, 3 to 5 weeks, push all the way into this 194.40 to 195.73 region. This is a 4-star resistance area, not shown in a support resistance, but able to contain buying possibly by that point in time through the month of April, and we can fall away from there. It would be a settlement above 195.73 that would turn the market very positive as we move through the rest of the second quarter and into the third quarter. I do think that this image here, closing above 195.73 over the next month or two, would carry with it the possibility for 238.95 by the end of the year. But we're a long way from that right now. I'm just kind of giving you the big picture. I'm going to go back to this image one more time. And that is to say, as you can see, if we do break into the 173.90 to 175.32 region, the trend line off of these lows, that is the basis of channel resistance, will drop at a steeper pace. And these channel resistance levels will drop more into the lower 190s. The point I'm making is, as we dip into the mid 170s, which is once again expected this week below 180.61, as we dip into the mid 170s, I think you 1 to 2 month near-term investors can buy the mid 170s and hold out for the low 190s as an objective. All right. And of course, the inverse would be true is if we test the mid 190s, if we do over the next month or two, we can fall back perhaps into the mid 170s within a month or two. We are not out of the woods on this sort of aggressively two-sided but yet congestive framework, unless we either A, close above 195.73, and then we're off to the races, I think, through the rest of the year, or if we close below this 162.55 region, which is not expected unless we close this week below 174.36, and that is not expected either. I do think there's a good case to be made for bottom picking, the low to mid 170s, 173.90 to 175.32 on not only a weekly but a longer term basis, which is to say well into the second quarter. I think I've said it all. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com for our 5-day free trial. You get 2 stock picks a week. Last week was Google and Macy's. I'm not quite sure what we have on the agenda this week. We get daily triple Q, daily SPY analysis, so forth and so on. And you can check it all out for 5 days. No obligation. After 5 days, you can bow out. Cancel your subscription at no cost to you whatsoever. But I suspect after you've tested it out for 5 days, you just might want to stick around longer term. I'm going to leave it at that for Monday's Apple Report. You have a great day.